Everyone, welcome back to my channel. In the ongoing efforts surrounding Iraq's monetary reform, Prime Minister Soudani and the Central Bank of Iraq, CBI, are taking strategic steps to exert greater control over the country's financial ecosystem. One of the key components of this strategy is bringing currency exchange centers and certain private banks under tighter regulation. By relicensing these institutions, the CBI aims to have a much firmer grip on their operations, ensuring that every aspect aligns with the broader goals of Iraq's economic recovery and stabilization. When Soudani relicenses a bank, it's not just about adhering to standard procedures, it's a move toward complete oversight. This process allows the government, under Soudani's leadership, and the CBI to enforce tighter regulations, ensuring that these financial institutions operate in harmony with the nation's monetary reform objectives. Banks, in this case, aren't left to operate autonomously. Instead, they are continuously monitored to ensure they comply with new policies designed to bring greater stability and accountability to Iraq's financial system. This control ensures that the banks don't engage in harmful practices such as currency speculation or illicit transfers, which have been problems in the past. An essential part of this reform involves currency exchange centers, which play a crucial role in Iraq's cash-based economy. By bringing these centers under the same regulatory umbrella, the government ensures that their activities are also monitored closely. In the past, currency exchange centers were sometimes seen as loosely regulated spaces where money could move in ways that escaped the full attention of the authorities. Now, with these centers under the watchful eye of the CBI, Iraq can ensure that they play a constructive role in the country's economic reform. Like banks, these centers will need to comply with strict guidelines, aligning their operations with the CBI's monetary policies. This new structure not only provides control, but also offers a symbiotic relationship between the government and these institutions. The currency exchange centers and the banks will receive a percentage of the volume they bring in, creating a win-win scenario. On one hand, the institutions will benefit financially from the increased transactions and deposits that come with greater confidence in the banking system. On the other hand, the government will benefit from the increased control over the monetary flow, which is crucial for stabilizing the economy. This partnership incentivizes these centers and banks to actively participate in the reform process, knowing that their compliance and success are directly linked to financial rewards. The benefit extends further into the community as well. As these exchange centers and banks begin operating under a unified system of governance and control, there is potential for the public to gain greater trust in the financial system. Historically, Iraq's population has shown reluctance to fully engage with the banking sector, often choosing to keep money outside formal financial institutions. This lack of trust can be attributed to years of instability and corruption. However, with Soudani and the CBI's tight oversight, the narrative could change, encouraging more Iraqis to deposit money into banks, which will, in turn, help stimulate the broader economy. Ultimately, Soudani and the CBI's effort to integrate these institutions into the monetary reform isn't just about exercising control, it's about building a financial system that works for the entire country. The combination of stricter regulations, clear incentives for compliance, and the symbiotic relationship between the government and the financial institutions creates a more robust and transparent system. This collaborative approach between the government and the financial sector could be key to Iraq's long-term economic recovery, bringing in a new era of fiscal responsibility, trust, and growth across the country. In conclusion, the strategy to relicense banks and incorporate currency exchange centers into Iraq's broader monetary reform plan is an essential step in regaining control over the country's economy. By watching every process closely and creating mutually beneficial relationships, Soudani and the CBI are ensuring that these institutions are aligned with Iraq's long-term economic goals. Through this approach, both the government and the financial sector stand to benefit while fostering a more stable and prosperous environment for the people of Iraq.